In 2026, two economic titans stand at a crossroads: the United States and China. One built its dominance on innovation, finance, and global influence. The other has ridden an engine of relentless infrastructure, manufacturing, and state power. Which model will lead the world next? Today, we step inside their economies, sector by sector, to see who's winning and who's falling behind. The United States boasts a nominal GDP of more than $25 trillion in 2025, with growth projections steady at 2 to 3% annually. China, meanwhile, logs nominal GDP above $18 trillion, and official forecasts suggest growth around 4 to 5%, though many estimates place it closer to 3%. Sources include the IMF and the World Bank. But raw size isn't everything. China's economy is still catching up in per capita terms. Average income in America is roughly $70,000, whereas in China it hovers around $12,000 to $15,000. That gap frames much of the struggle ahead. China remains the factory of the world. From electronics to steel, China's infrastructure and supply chains have no parallel. But in 2026, that dominance is under pressure. Wages are rising, environmental rules tightening, and some production is now shifting to Southeast Asia. The US, on the other hand, is focusing on high-tech manufacturing, semiconductors, aerospace, electric vehicles, advanced robotics. These are higher-margin industries that can sustain a technological edge. The question is, can the US rebuild its industrial base enough to counter China's scale advantage? In areas like AI, biotech, renewable energy, and quantum computing, the US still holds a lead. Silicon Valley, American universities, venture capital, they remain global magnets. China isn't far behind. State-backed programs push frontier tech in neural networks, solar tech, battery chemistry, and telecom, 5G or 6G. But China faces constraints: intellectual property challenges, restricted access to advanced semiconductor fabrication, and international tensions that block technology exchange. The US economy is deeply integrated into global trade. America imports consumer goods, electronics, medicine. It exports high-value goods and services. The dollar is central to those flows. China's trade model is export-heavy, selling manufactured goods globally, but it's also pushing Belt and Road initiatives and trade partnerships, RCEP and AIIB, to cement influence. But rising geopolitical friction, protectionism, and supply chain decoupling are reshaping global flows in 2026. Wall Street is still the heart of global finance. The US dollar remains the reserve currency. Capital flows into US treasuries, equities, and tech startups. China has built its own financial institutions, CEPR, RMB cross-border pipelines, but the renminbi is far from dethroning the dollar. Capital controls, investor risk perceptions, and regulatory opacity limit China's reach. Ultimately, in 2026, the US still writes most of the global financial rules. China is the world's largest consumer of coal, oil, and metals. It also leads in solar panels, wind, battery manufacturing, and electric vehicles. China's energy transition is vital for its future. The US has vast fossil resources and a growing push towards green energy sectors: hydrogen, carbon capture, next-gen solar tech. But balancing energy security, emissions reduction, and global competitiveness is a tightrope. The country that leads in clean energy supply chains may win the next economic chapter. America benefits from immigration, a growing working-age population, and high productivity per worker. China, however, faces a shrinking workforce. Its fertility rates have dipped below replacement. Aging population is becoming a drag on growth. In 2026, China must squeeze more output from fewer workers and push automation hard while fighting internal inequality and regional disparities. Each giant carries vulnerabilities. For the US, rising national debt, over $35 trillion, political polarization, and challenges in education and healthcare. For China, high real estate debt, hidden local government obligations, regulatory overreach, and geopolitical friction. Taiwan, trade wars, and sanctions. The global arena is shifting, and each misstep could tip the balance. As we move beyond 2026, neither economy is guaranteed dominance. The US may ride advantage in innovation and financial institutions, but China's scale, ambition, and state coordination are formidable. The future belongs to adaptability, not just wealth. The country that can pivot green, manage inequality, navigate geopolitics, and keep its technological edge will prevail in this modern economic struggle. The rivalry between America and China is not just a battle for wealth. It is a contest for the world's future.